All right, everyone, welcome back to our weekly analysis. This is the 9th of October 2023, and the Euro USD rundown we're going to do. Now, before I even get into it, um, this week, because of, let's just say, unforeseen circumstances, as in what's going on in Israel, for example, this is going to be, it's going to be risky because you don't know, and I don't know what exactly is going to come of this. Like it'll make the market a little bit crazy, put it that way, because it just takes one statement. And I give you example, America backs Israel, Russia backs, Palestine. Putin has already said that America needs to stay out of it. I don't care about your political views. Um, I'm just trying to say, it's going to have an effect on the market. So at least stuff dodgy. Personally, I will be lowering my own risk this week. Basically, because today is Monday. It's a holiday, I believe, in Canada and America. I think. Um, you know, all talk of war, and Israel say they're at war. Any statement could just come out, or breaking news could just come out and send the markets haywire. Especially when you're dealing with USD, because uh, let's let's just imagine America turns around and says, right, we're going to war with Israel, then, you know, this thing's going to go haywire with it. So stop losses will mean nothing. Small stop losses will mean nothing. Bigger ones, obviously, will get a bit of, bit of time to close, or even it won't jump your big stop loss. So that makes sense. So personally, I don't use big stop losses. Anything between 5 and 12 pips is the max I'm going to use. Excuse me. So I'll be lowering my risk this week. Like I'm not going to be really interested in firing 1% in the ring anymore. I might half it. I might even go to 0.3335, just to protect my capital. Because if anybody knows me, I always rave about. Excuse me, clear my throat all the time. I always rave about being a good trader isn't just about making profits. It's actually about protecting your profits, protecting your capital at all times. For me, that's the simple thing to do, and the logical thing to do. And the market's kind of at a point where, um, with what's going on around the world and where it is right now, I just feel that's where I would feel comfortable at, and I would suggest you do the same. Okay, you don't have to do what I do. I just feel like this is a good week, maybe just to protect your capital a little bit. The markets ain't going anywhere, and it's you want to be trading nice and calm. I don't want to be firing 1% on the line and something come up, especially with tight stop losses. Uh, that might put a dent in my profits, and I'm not interested in putting a dent in my profits. I don't mind wee tiny ones. I just don't want to lose them just out of greed, if that makes sense. So, looking at Euro USD weekly analysis now, everything's worked out as the previous week's analysis. Say we spoke about this and this, we really run through it, and we said if it's going to take out this low over here, right, which it has, right, and after 11 weeks bearish, we've had at least one bullish candle. Now the market has opened up today. We're starting to come down. I'd be interested at the mid range of this wick. I want to see what the market's going to do on the weekly on that, and I know there's a little price imbalance up here, right? So if we are going to get a little turn, a little retracement, you know, I want to see, are we going to run up into this imbalance now? I'm not saying we're going bullish, all right? Until this tells me otherwise, we're still bearish. Still feel like this is where we might go, but it's starting to show signs that we are maybe going to even find at least a retracement, right? Now, usually I don't look at the market in the morning. I just had a quick look and then it just says no. I'll talk my way through it, but I just wanted to see, did the news over the weekend affect the market, or NFP always does. So I had a little look, a little quick look. Now we still on the daily, by the way, we have not broke structure, right? So we've the swing high, just imagine swing high, swing low, come up, and you'd expect it to come down, take out these lows. But the further I go into lower time frames, and I'm just going to start by marking out these fair value gaps, right? That's now what I would classify as an inverse. So we came down, swing low, broke through it, and closed, right? Although we didn't close above this high, we have still specced into this fair value gap, closed beyond it. For me, that's inverse now. And then I start to look at lower time frames to see, have we started to really push through it. And as you see with this 4 hour, came down, took out the lows, and immediately pushed up through it again. And yes, well, it looks like we're breaking down, but you have to remember, folks, there's other fair value gaps here. Is it just going to use this to push on further? Now, breaking down into the 1 hour, this is where I would have liked to see the market ultimately turn. Um, that was NFP, by the way. It really, like, this broke down, but then it immediately pushed up through and closed solid above that. All right, yes, took out sell side, yes, took out buy side, but it's just showing little signs that, guess what, we may be seeing a slight pullback. Okay, don't. I'm on the fence today. And Monday, I'm always cautious, uh, but I just feel like this is kind of an important time in the market. If we miss this move to take out these lows, that's fine. Now, the way I trade is I will trade to how until the market actually tells me or gives up the hand. So I am still selling, all right. If I had to, and it would be to take out these lows. But whenever I start seeing little telltale signs about it pushing up through for value gaps and closing, that is my first indication for me, especially like this is a 4 hour, so it's a pretty strong time frame, and that is a daily. It's pushed up through that in a daily. So I'm on the fence today, folks, for Monday. It's a holiday. I'm not going to risk choking into profits just for the sake of getting into the market. I want to see what it wants to do right now. If I was, forced into making a trade, it is going to be a sell. It's going to be to take out these lows. It really is, because again, it hasn't. It hasn't. Give us the indication it's definitely turning. Is it going to attack the weekly low? The probability of that is higher than attacking the weekly high. But again, we have taken out all this sell side. We have been down for 11 weeks straight. Even though this is a bullish candle, we still have not, broke structure, let's just say. Taking out the lows. Everything to me is pointing down, but ultimately it's starting to show signs of dollar weakness, because when dollar goes weak, it'll move the other way. This breaking beyond this fair value gap, let's say on the daily, spiking down into it and closing above it, is to me a really good indication, a really good first initial indication that we could be seeing a retracement. Now, into what? We have imbalance up here, right, and an imbalance up here. That's days away, right? Days away. So let's just sit in our hands today, folks. Let's not get, carried away. We've got to understand too. I'm a lover of voids. So let's say I go into the 1 hour. These voids here. So for example, this one, all right, and this one have both been broken through and closed beyond on the 1 hour. All right. it's just a first sign indication. This structure that's built up in here now on the 1 hour, all right, is, sorry, excuse me, I'm all over the place there. It's messy, right? And with that, I'm not afraid to say there's times I want to sit my hands. This is that time. With what's going on in the news, you know, with what's going on in this war with Israel or Palestine, whatever, it's it's a risky time in the market. I'm not going to say it's going to be that way all week. It just feels like it's a little bit more riskier now in the market. So why would I want to jump in and risk my profits on a Monday when I'd rather let it play out and it being a holiday? Why not just let it show its hand? Let's see if this is going to, how it's going to react, especially to this week, right? If my eyes on anything right now, this is the reason I'm sitting on my ass, is this week. I want to see how the market reacts once it comes into the mid range this week. That is what I want to see. Now, if it cannot break past it and close today, then I'm even feeling more like there's going to be a bullish reaction again. You got to remember this fair value gap here from this low to this high. It is closed, wick down in it, right? Taking out sell side liquidity, came up, taking out buy side. Let's see what it's going to do now. All right, this is an important day to let us know what's going to happen the rest of the week. So my advice, folks, sit on your hands, do a little bit of back testing, sharpen up your tools for the rest of the week. Don't, if you feel that urge like you must get into the market, listen to me. Step away. You don't have to get into the market. If it's not telling you what to do, what I've always said, it's already told you what to do. Do absolutely nothing. Right? Sit on your hands. Let the amateurs blow a ton of money guessing where it's going. We are only interested in high probability trades, or the highest probability trades. And that you only have to get one good trade a week, and guess what? You're paid. You can sit at home. You can enjoy your life. You're not doing 9 to 5. One trade a week, and you can't wait for that. You have to wait for it. All right. I'm not saying there's weeks where I could get 10, 15 really good trades in, but when them weeks don't come, it's just as important to sit in your hands, because you'll eat into them 10, 15 trades that you got good results from just by getting that FOMO, the fear of missing out, actually wanting to get into the market when you shouldn't. All right. So I'm going to leave it at that. I don't think there's any point in going into any more detail. Today is a day I'm only interested in to see how it reacts to this week on the daily. After that, then yes, I'll start looking at what lies ahead. Okay. Now this week, I know there is PPI and CPI on the dollar. If you're doing GBP, I'm not sure actually what's out in GBP this week, but I'm only trading this week anyway. So sit in the hands, folks. Enjoy the day, relax, do a bit of back test, and read something. Improve yourself, and learn. This is a good day to learn to do absolutely nothing. You can absolutely tape read all day. So watch the market all day. Say to yourself, what would I have done here? And go do it. Mark it up. See if it played out exactly how you would have done it. If that's not a day wasted, that's just you getting a little bit better reading every single candlestick, which ultimately what makes you an absolutely elite trader, is being able to read every single candlestick to what it's doing. Right now, that's telling me in the candlesticks. Simple. Push through what should be a fair value gap, close beyond it, wicked into it, might I add, got the rejection, close beyond it. This one, is it going to the mid range of this? Let's see what's going to close on Monday. Right? It's not hard to do. Go find something else to do today. All right. So I will leave it at that, folks. and have a safe day's trading. Let's not rush into anything, and God bless.